How we doing, Lambus? Welcome, everybody. Welcome. Yeah, I saw that. I saw a story on someone say there's a huge amount of gamma still out there sitting in 5600. Did you send it in the chat? Oh yeah, nice. I was gonna say I heard there's a bunch of gamma sitting out there somewhere around 5600. We'll see if we want to go test that. I don't know. This candle wasn't the type of candle that bulls or bears wanted to see today, in my opinion. And that whole gamma exposure thing is tricky because, they make a ton of money as long as we don't get there. So. Welcome, everybody. How we doing? Hope everybody had a good day today. Yeah, because you got to remember that for anybody who's holding long up here, or where, I guess this is an SPX. Just look at SPX for it. Anybody who's holding long up here, longs for up here, they were sold. So the big money selling those longs is, they don't want us getting up there to 5610 or whatever, that's where they start to get hurt and lose money and have to cover those positions because, it's interesting that we don't talk about it often, but, Q&A, we're just starting here. I don't talk about sell to open often because I think for the average person, it's just not the right idea, and so because it can be small reward, high risk sort of trading, which I just don't like. And then with options, that unlimited upside, I'm a bit of a sucker for that. And so, but you have to think all of that gamma that is sitting up there 56 or 60 5610, that's sold contracts that somebody bought. And so the people who sold those, they make money when we don't get there. And that's where that real money is going to be at, is, the large money firms that can sell, thousands of contracts of out of the money SPX puts, knowing that they're going worthless. There's some money to be made there, but they can also get hurt when it runs in the money on them. But it can also, like we saw, I think it was Friday. I didn't look at it, but I got to believe that somewhere on this breakout here, I'm assuming that there was a huge amount of gamma sitting somewhere around that 5,500. And so this was those people starting to buy back those calls. They likely were buying back their calls here. And that gives us a nice run up on it. Wow. 493, that's wild. It's a good solid amount. Welcome, everybody. Hope we're all doing well. We're gonna give it a little bit more time, see if a few more people want to show up. We had awesome attendance last night. Might have just been a fluke, but hopefully we'll get a few more people showing up. Yeah, no, I'm still in those 550s on that thing, dude. We got to go back and try it. I mean, that's why I bought a couple of weeks of time, so I could be a little bit wrong. But see, I was hoping, I didn't mind the small gap up, but I was really hoping that we were going to get this much sell, but off the open. which unfortunately we did, and we took that push up, and so the sell didn't work for me. But I'm still riding them. We'll see. It's not shaping up good, but we'll see how it goes. Big data this week. What is good IV when looking at a contract? That's a really tricky question there, Lion Trader. It depends what you're looking at and what you're trading. I mean, in my opinion, in simple terms, like if you start seeing those 5, 6, 700% IVs, just don't trade them. Even over 100, 200%, you're kind of playing with fire because you can lose not only to delta and theta, but you can also lose to IV at that point. But most of those things that we trade frequently, your SPYs, QQQs, Nvidia, Tesla, all those big names, big movers, you're going to very frequently be in that 30 to 100% range. That's not uncommon. Nash, how we doing? Oh, I saw somebody. What are we anticipating with PAL? It's pretty hard to say because this is a testimony to Congress regarding monetary and fiscal policy and some banking regulation stuff. So I think that depending on what he says, XLF could kind of be a sector to have your eyes on, the financial end of SPY, because that when he's talking about it, we can expect movement on it. You can also, of course, trade SPY, and if we got tech pushing and you got XLF pushing, then we can likely get a nice move. That's what was going on today. We just had the market was all over the place. Strong open on XLF, gave it all back. XLE, strong, well, gap down, big push, then sell, give it all back. And then you had kind of you had tech not really do anything all day long. Some of those individual names were putting up big moves, but they were putting up big moves that explain chop on tech. Big sell, buy right back up to right around open and grind it there for hours. Microsoft grinding all day. Tesla putting in a big old run and then giving most, I guess I didn't really pay attention in today. It did end up taking a little bit of a bounce, but gave up most of the move. Barely even ended the day green. At one point it was up big. So when you see that kind of movement, you expect some range trading, and I assume that the market is waiting. We got CPI this week, we got PAL talking for a couple days. I think we got a 10-year auction. There's a million things that will move the market this week, so we're good. One we talked last night, RSP, which is that equal weight, S&P, it's everything equal weighted. And off the open, we were seeing the expansion we wanted to see, but we had tech not participating at all, and we had tech selling. So we started to see selling here. And once, by the time tech finally started buying, we had already begun the selling and the lack of expansion on RSP. So, there were all signs in the market that today was basically going to be a range day. That's why I kept it pretty quiet. I tried to hit a couple scalps on trade flow. I think, I don't know, made a couple bucks, but when you have slow movement, like a couple nice candles throughout the days, but this type of movement in a 50-cent range gets pretty tricky to squeeze any money out of. Today was definitely not a day to cut your longs or cut your shorts based on this movement. Nash, how we doing? Yeah, Lambos, we currently are not, but we had a nice week of consolidation to kind of funnel this breakout, but I still want to see this retest to 550. It was tricky for us a couple of times until we finally took that big push up on reducing. I did want to get my other one going. Reducing overall volume. And then today, we're not seeing volume wise, we aren't really seeing what you want to see for bull or bear side, but especially bull side. You do want to keep this buying volume higher than the selling volume when you're doing big breakouts like this. Okay, give me 1 second. We'll get to rolling. I guess we're already kind of rolling, but my yellow lines are just trends. These ones are just trends up here. And this was where I was looking. If we were going to push, this is where I was going to be adding to my short, but I didn't. We fell, we fell short of that during the market by about 60 cents or so. Oh, or this one. Yeah, daily 20. Thanks, Travis. Okay, so we're gonna get rolling here. Welcome everybody, Dirty River. Happy to have you. Welcome to all the new members. Welcome to all the people who I always see in here. You know, my regular lecture team. You guys are all great. Tonight we're taking a step away. Obviously, you know, we're still gonna be talking charts. We're gonna be asking questions about charts. I'm assuming we'll get a lot of technical questions in here. And so we're still gonna be looking at charts, but we're taking a step away from the direct, you know, like technical lectures that I typically give. Most of you know I'm a pretty big technical trader, so it's what I like to talk about. But today it's your questions, whatever you want to ask, whether it's, you know, trading stuff, questions about the Discord, trading psychology, technicals, whatever you want to discuss. I kind of want to request that we don't start just asking what do you think Nvidia is going to do tomorrow just yet. Hopefully we'll have some time at the end of the day where we can go over some charts. I know that a bunch of our trade plans from last night they did end up working out pretty well for us. You know, I know Apple hit, I know AMD hit, I don't even remember what else we talked about at this point. Oh, I think Amazon did not hit, but never gave us our long entry we were looking for. I even mentioned that I wouldn't short it, and I regretted that because you guys might remember in my lecture last night, I said, if we break this trend, it's a trend break that I really don't care about. And while that is true, and we ended up taking a nice bounce on it, there was no denying that short was the move on Amazon today. Obviously, not a big move. I mean, you got a buck or two down, you know, whatever it was. But short was the move on Amazon today, obviously. And so, you know, that one did end up not hitting for us. We needed that strong closes up here above 265 cents. We had one after a big rejection. So I don't buy a candle like that when we haven't even broken this high up here. That was ultimately sold off really big and then never came back. So if you shorted the highs, good on you. If you shorted the trend break, good on you. I didn't happen to catch either one of those. But so at the end of the class, hopefully we'll be able to talk a couple of charts with everybody. And you all know that I love looking at your ideas, and we had a ton last night. I wish I would have written them all last night. So we could go back and look at a few of them, but I didn't even write them all down this time. But with that, welcome again, Dirty River. Happy to have you. Q&A. We're just going to get rolling. Send your messages in the chat. If you have a slightly more detailed question that you want to ask, you know, we can always unmute your mic if you want to talk, or if you don't want to talk, then you can just go ahead and ask it in the chat. But let's get rolling. Starting with Gail, I'm already a ways behind in the chat, as most people know I'm horrible at it. And she's saying, how do you stick to your plan when you trust the analysts, although you may not agree with their trade move? And so it's really hard. And, you know, I'm just going to say it right now. I'm an analyst in here. So take anything I'm saying, you know, just pretend I'm only applying it to myself, but know that it kind of applies to everybody else. Analysts are wrong sometimes. I'm wrong sometimes. We took a stop out on trade floor from one of my trades today. That's fine. If we're wrong, we're wrong. If you have a plan that says something else, you can always feel free to ask one of us for our opinion, or you know, take your trade. That is one thing that we have to do as traders, and it is the really hard part of trading, is building confidence. And sometimes we're wrong, you know. We've all seen, you know, the analysts in here say, you know, get in this trade, whatever it is, and we end up being wrong. Don't If you have a fully laid out plan, you're saying here, you know, you like your levels, the levels were working, trade your plan. Don't let anybody else affect your trade plan. I will say, if you're following an analyst, before you make a decision, ask them their opinion. But, you know, if what they tell you doesn't work with how you want to trade, then you do have to adjust it a little bit. You know, say somebody alerts something and they give you the stop out level, and then you look at that contract and you say, well, I'm going to be down 40% on that contract if we stop out. That's not a risk that I'm willing to take. And so always follow your plan. Whatever your plan may be, you may be right, you may be wrong, but always follow your plan and follow your risk management. You know, maybe an analyst can handle their trade going minus 100% because they have a bigger portfolio. You know, I said one on Trade Floor today that I was buying some SPY calls and I was going to let them go to zero. They fortunately ended up paying, but my plan was, I knew if the market went against me, those contracts were going to get really, really beat up. So you want to put it out there before any trade. All analysts should, we all try to do it, Tilio, Grizzlies, Flips, me, Toasty, we all try to give you our plan before we enter the trade. So just, if you think we're wrong and you want to take the opposite trade, take it. One of us will be right, and that's just fine. Stick to your plan. Hope that answered your question, Gail, and thanks for being here like you always are. Travis, thanks for asking. My day was good, fun one. I took very few trades today. There's very little that interested me. I scalped some SPY calls right around here. I scalped some SPY calls right here for like $6. I took another spike. Somewhere down here. I think I had drawn a slightly different trend. I think that I had a trend looking like this. And I took maybe this bounce on these SPY calls, and these ones actually did pretty good. Percentage wise, they paid a lot. Small dollar amount because I went out the money. I should have just gone out the money, but didn't. And then tried some more SPY calls here that paid like $5, and then I stopped out for a $5 loss instead. And that was about it for me. Pretty boring day overall. This volume study, the one down here, Ethan, this is you. The one down here or the one up here? I'll come back to your question and answer it. Yes, so Gail, so I see your thing, and I love your question. I didn't take it rude at all. I didn't take anything, I didn't take any of that rude at all, disrespectful to analysts. I didn't take it that way at all, just to clarify. But analysts are wrong, and it is fine to trust them, but you need to manage your own portfolio because, like I said, if you can't handle a really, really big loss, which, I of course think people should be stopping out. Obviously, when trades are going against them, you should be stopping out. You shouldn't just be holding because you have time or anything like that. So no, I didn't take it that way at all. Follow your plan. If an analyst alerts a trade and they say, hey, I'm willing to risk 50%, but you're only willing to risk 20%, then that's where your stop is. You stop at 20%, no questions asked. Oh, Rev, you're having a hard time telling the future. You just got to tap into that river tab, Tim, gun to my head, one entry setup to pick as my strategy. So because it's a Q&A, I'll answer it, but I want to put this out there that like this is not, you cannot trade like this. But if I had to open my charts and only trade one thing, it's this. I'm putting the hourly 20 on here, the hourly 20 EMA, and I'm taking trades off of it. I'm buying calls when we pull down to it, either of these, you buy calls there. And if you just look at this thing, it is, me and Sushi jokingly call it the cheat code, if we're above it, you should be looking to buy dips. If we're below it, you're looking to short rips, but I'm using this hourly 20. And, we push up to it. I'm shorting it on breakdowns. I'm shorting it here. Maybe I get stopped out, but I'm shorting it here. This is what if I gun to my head, I got to pick one. It's the hourly 20 and I'm just trading around it. Oh, Christian, hello. Hey, bro. Bottom study. This is buy versus sell volume. I believe that it's pinned in my tab. If it's not pinned in my tab, it's pinned in Toasties and you can get it for sure. Oh, I didn't even have the other one. And then the other one that's pinned in there, you'll see it's like labeled assassin volume. It's this top left one, which I love as well. Oh, we got Flips in the house. My brother.
What's good, boss? How are you?
Flips, doing good, man. How are you?
Doing really good, my man. Just here learning.
Awesome, dude. Yeah, I saw you hit yet another SPX banger into close, dude. Good for you. I've been loving seeing you hammer those, dude. That's awesome.
We've been getting lucky. We're good.
Yep, been getting lucky, dude. That's right, dude. I like that. I like that, dude. I'm just getting really, really lucky. Okay, we'll keep going. Oh, I got a direct message about setting up Active Trader. Ask me that at the end, and I'll spend like 5 minutes doing it. It's super quick, super easy. Yeah, we can definitely do that. And I'm sure you aren't the only person that has that question. We get asked it a lot. Or if we hit a lull in questions, then just bring it up again, and I will happily go over that with you. Right on, Gail. Happy to hear that. Oh yeah, there you go, Giovanni. Everybody knows that Flips is he's an animal, man. That guy just hammers him all day, every day. We're lucky to have him here for sure. Which brokerage do I use? I use Thinkorswim, TD Ameritrade, or I guess it's Schwab now, but I use Thinkorswim. I don't know. I think it's the best of the best. You get free live data. You get way better fills than Webull or Robinhood are going to give you. There is commissions. I think it starts at like $1.30 per contract, which I get it. Robinhood doesn't have those. Webull, I think theirs is about half the amount, maybe a little bit less than half the amount. But over time, you can one, you can get them reduced. And two, the main thing that I tell people is there's two reasons that, well, you know, beyond the fact that it's a far superior brokerage to the other two, there's a couple of reasons that I think that you should not care about those things. If you frequently market order, which I personally don't, I only limit order, but if you frequently market order, your fill will 100% without a doubt be better on Thinkorswim than it will be on Robinhood or Webull. So that alone is going to cover any $1 thing that you have. And then when you limit order, because there is more trades going through Thinkorswim, you will also frequently get picked up when other people aren't getting picked up. Everybody, well, you know, some people in here know Zane, and you know, Zane's a buddy of mine, and we made a big mistake, but he's a good buddy of mine. And we used to trade a lot. And there was days where, I mean, I would be selling contracts. I wouldn't even have an order placed, and I could place a new order and my contract would sell and his would not sell. And so to me, Thinkorswim, it's got any tool you could ever need. I personally don't use any of those fancy indicators that people like TradingView stuff. I just don't, I don't see the need for something like that. You know, Thinkorswim can pretty well get you anything you want. And then for anybody who doesn't, like, you know, and I don't do this because I use so few indicators, you know, I mean, my chart might, we'll just talk a little about indicators. My chart might look like it has some indicators. It has the 920 and 50 EMA. This purple line here is VWAP. And then these blue lines right here, those mark the opening range for me. I also draw a box around it. And then this stair-steppy one, the hourly 20. You know, that's, I mean, so I technically have 5 indicators on my chart, but they're just run of the mill. They're easy indicators. They tell you what the market is thinking. So that's really all I personally use. So it works great for me. If you are into some of those more advanced and weirder indicators, not weird, but just different indicators, just Google them. The amount of free scripts out there is insane. One that I do sometimes use on occasion, and Assassin actually made this one for me too, but I like to trade the 5 and 13 EMAs, specifically for crossovers. And so I had my buddy make this for me, where when they cross, a little arrow pops up. These aren't necessarily entries. You know, this arrow would have printed probably after this candle, so it's not like it's a ton of help. You know, you aren't going to buy puts down here, I hope, you know. But sometimes you can catch a nice, it probably crossed on this candle, so you might get this arrow printing here. So I will use some other ones, but you know, the bread and butter day in, day out, 9, 20, 50 EMA, VWAP, hourly 20, and volume. I mean, if you aren't watching volume, you aren't watching the market. If you aren't watching volume, in my opinion. I know some people, some crazies out there say don't use volume, but volume moves the market. So you typically, in my opinion, you need to be watching volume. Nice line, Jerry. You got down to 30 cents. That's lower than me. Mine's at 40, and I'm happy with that because I mean, I spend 80 cents on a contract, and like, if 80 cents is make or break on your trade, you probably shouldn't have taken the trade in the first place. You know what I'm saying? No, so saying you should switch from Webull, no, I mean, I don't like Webull. I would never use Webull, but there's tons of people that are super successful on there. It does have its issues. You will like sometimes not get the best fills. It tends to, you know, mess up a little bit more. Like I've had Thinkorswim mess up on me, like, I don't know, 3 times ever. Webull will have some issues, and less now, but there was a time where like every couple of weeks the Webull people were like unable to sell or log in, or you know, it was a mess there for a while. So to me, I just want to stick with tried and true, you know, like to me, Thinkorswim is kind of, you know, it's the fancy car of trading. You know, it has everything you could ever need. We're gonna get into the active trader a little bit later, and to me, that's like basically the most like, that's the most powerful thing about it, is the active trader for trading options and just all of the different things that you can do with it. I think it's just super awesome to have. Good question. What's the difference between a limit and a market order for beginners? So we'll just pull up, and this isn't the active trader that people want. So this is the active trader on Thinkorswim for anybody who doesn't know, and you can set it up to link to options, and obviously that's what I do. But this is currently just the active trader for trading shares on SPY. So what a limit order is I can look at the chart and maybe say, you know, I can look right here and I can say, okay, if SPY dips to 556.25, I want to buy shares of it. I'm not saying like do this. This is just an example. Don't just go buy SPY shares because it dipped 40 cents, you know, but I can say, this is where I want to enter. So if I come over here to the active trader, 556.25, I click right here and I will fill at 556.25. If we get there, maybe I don't get all of the shares, you know, but that is the price that I will fill at. No questions asked. Well, maybe I want to get into, you know, shares right now. That's when you might use these market order buttons. The issue with a market order is, you know, limit order, you have the limit that you are willing to fill at. That's what you're willing to buy them at. So that's what you buy them at. Market order, you are filled at best available price. So if I marketed in on 100 shares of SPY right now, I might get them at, you know, 48 cents, some at 46, some at 43, some at 38. You really have no idea where you're filling. So in the situation on something like an option contract, you know, maybe you're in something that has a $5 or $10 spread, you might see, you know, I bought these contracts at $150. They're at $200 right now, but the spread is at 190. If you mark it out, you're getting filled not at 200. You're getting filled somewhere down closer to the bid. And so you have no control of when you exit. So what I do, say I buy my SPY shares here, 556.25. So I'm in these shares. Well, if we push back to 556.63, then that's where I want to sell them. I can now set a limit order up here. So it's just sitting and waiting. And if SPY bounces, that order fills for me. So that's how I, you know, a lot of the time when I'm buying SPY contracts, if we're selling and I want to buy SPY, I have my order, SPY calls, I have my order waiting right here. You know, while we're selling off, I want to be ready. And so that's how I frequently get a pretty good fill, you know, is I know where I want to be entering. So I already have that order sitting there waiting. Well, then on the other side, maybe I'm just looking for a scalp up to, you know, maybe around these lows somewhere. I can set the limit order there. And if we get a wick to it, I'm getting out because my order's been sitting there. So I'm probably first in line, or I'm at least very early in the line of sellers. So if we get that wick up there, I might get filled when other people are unable to fill. So I like limit orders. I use them all day, every day. It's typically going to give you the best fill. I know Flips talks about it all the time. He'll say things like, you know, I don't know, if we bounce to VWAP, buy SPY puts, and look, we got a wick. Well, Flips probably had an order sitting right here at VWAP because he knew where he wanted to be short. So when everybody else is chasing Flips's put order right here, he already got the better fill because they're sitting and waiting, you know, and he is quick on the draw he's quick on the draw with the market order. I can't deny that either. So he can get a good fill, but he knows where he wants to fill. So he has, at the very least, he has, you know, finger on the trigger, ready to go sort of deal. So
That's actually very accurate.
yeah, I mean, I figured, I hear you say it all the time, and then, you know, I listen, and so I see a wick happen, and I hear the ding, and I'm like, Flips is in, you know, like it's that, you know, you hear it, you know. Oh yeah, Flips saying yes, change to Thinkorswim. I mean, I'm not gonna say that's wrong. How would I manage position sizing on a risk to reward when starting fresh with 1K? You got to size small. I mean, you and it depends how you're treating the portfolio. If you're really trying to trade it, then you're gonna have to have slightly larger position sizes than you might want. You know, I typically recommend to people, you don't want to, you don't want to be in more than 5-6% of your account when they're small, because if it goes against you, that's 5 or 6% of your account you can lose in one trade, you know? And so, but it's difficult because $50 contracts that are safe can be hard to come by, or safer can be hard to come by. And so, you know, you don't want to be like the degens that are, you know, trying to trade the $15, $20 out of the money contracts just because they can afford them. You have to, when you have a smaller portfolio, you have to say to yourself, you know, I like, if I can't afford a reasonable contract, I'm not taking the trade. That's what you have to say to yourself. But if you have 1K, you're realistically going to be needing to put probably 10% of the port into a trade. But if you're doing that, you need to be managing that position very well. You can't let it go 30, 40, 50% against you, because that's 3, 4, or 5% of your portfolio lost in one trade. So you can't let that happen. So it all comes down to just protecting your capital. I, of course, you know, recommend the slower movers, you know, trade your Coca-Colas, your Pfizers, trade those kinds of things. They can grow a port really fast, really safely with cheap contracts. But if it's a bit more of a degen port, you know, then you're probably going to find yourself in larger positions than that. But you just always have to manage that risk as best you can. Yeah, Flocka, that thing's flying. ES just on a ripper. Wow. Oh, we got some call swingers. Yeah, I'm still swinging short. So hourly 20, this is another custom script pinned in my tab. It might be pinned in Toasties too, but it's the multi-time frame moving average, and you can set it to whatever you want. I know that 1K, he like uses he really likes the daily 9 EMA. It's not something that I personally use, but it works great for him. And so he has his set to be the daily 9 EMA. And now if we're pulling down to that, he's probably buying dips on it. And I just like the hourly 20 because, I mean, it is really, really effective, at least in my opinion. You know, it does a very, very good job at, like, you know, marking bounce points or breakdown points. So I prefer that one. Yeah, Flocka, I wish that guy would pull up to some of these. He refuses, though. I don't think he likes me very much. I keep it a little too real for him. Nice. Okay, so we're caught up on questions. I know that one that I didn't talk about was setting up Active Trader for options. And so I'm gonna show you how to do it, how I personally do it. And so unfortunately, because I'm not sharing both of my screens right now, and I think if I change it, it'll boot everybody out. But how I do it is when you are on your main Thinkorswim page, and you're in the charts tab, you'll see a little thing that says flexible grid, and go into flexible grid. And so, and I know that I'm, you know, it's kind of, I wish I could explain it better to show you what it was, but I'm just not sharing that screen right now. But go into flexible grid. When you go into flexible grid, you'll basically see something that looks like this. It'll just look like a normal chart. But what flexible grid gives us the opportunity to do is it pops up these 9 little squares up here. So when you click on that and click on customize grid, this little box, I hope you guys can see that in the middle. Yep, little box right here pops up in the middle that has a couple little buttons you can click on. And what these are, the one with the plus on the bottom adds a chart or a square to the bottom. If you want to get rid of it, you can get rid of it. Or if you click on the one to the right, it adds a new square to the right-hand side. So for now, we're just going to keep it simple. You know, you can have a bunch. Like if you just have one screen, you can have 4 nice little charts going. You can have some active traders, whatever it is. But we're just going to keep it nice and simple, one chart and one active trader. And so what I do from here, I like to link it. This might link to something random. And what I mean by link it is I click on this little thing. And so we aren't going to use this one today, but if you really are into looking at option chains, there's another way to get your contracts here. But what you want to do, you want to come up into here and you want to click on this little down arrow right here. And then you're going to be able to go to options, and then you're going to be able to type in SPY. Maybe. Sometimes this thing doesn't like to work for me. Come on. There we go. SPY. And it's going to pull up the option chain for you right here. So, you know, obviously we aren't going to buy these, but all you have to do is click on it. And so now we have pulled up, this is actually the option contract. And so what this is showing us on this left side, obviously calls, showing us the strike date, sure, the strike price, showing us the expiration date. So, these are, well, now expired, but same day SPY calls. So we send some SPY calls to the active trader. Now over here on the right-hand side, there's all of these options. You click chart to get rid of the chart, and you click active trader. If you want to get rid of that box in the middle, you again click on customize grid. At this point, you now have your active trader pulled up. So if you want to buy some contracts, you just click on this green side. That'll place limit orders for you. If you're above it, it'll place stop limits, which means it buys if it rips past it. You can use buy market, sell market here. Obviously, anything on the right side is going to be your sell orders. So, you buy these things at 10 and you want to sell them at 20, you just click over here. Well, I mean, if it gets to 20, you just click over here and sell them. And so that's what I love to do. One of the other options of it, or one of the other great things that it does is, and it's probably going to tell me like, I don't know that I can't do this right now, but if we watch this, I need to pull, we'll probably see it pop up real quick. If you place an order, I almost forgot, this is important. So this little down arrow right here, I haven't set one of these up in a while. This little down arrow next to buy market, sell market, I always click auto send. Otherwise you get that little pop-up that we just saw. But if you click on here, it will, well, it's going to be way out of where we want to be. It'll put a line on the chart. So if you're trying to like limit sell something, like we were saying, you buy some SPY calls here, you're looking for a high up here. When you enter them, you can place your limit order and it will pop up on the chart for you. On the other side of it, if you place a stop loss on it, it will pop up the line on the chart. So if you want to stop, if we're selling below this hourly 20, you want to stop at 554. I mean, I don't recommend that, but you want to stop at 554. You can, once you enter the trade, you can set that stop. And then is the trade, and it'll put a line on the chart and show you where the stock needs to go for that stop out to hit. Then as the trade goes your way, you can actually click the stop loss here and just drag it up, and it will move the line up your chart so you can kind of trail the trade as you go. So super simple again. And then once you have this set up, maybe you actually wanted to trade tomorrow 557s. All you do is click on them. Or if you want to trade AMD, you can do AMD, and here's your AMD calls. You can click on these and they just pop up instantly for you. So ready to go. And then again, this one will even show it a little bit better. You can set limits down here to buy on pullbacks. You can set sell limits up here to sell if the contract bounces. And then again, on this lower right-hand side, you see it says sell stop. This will place a stop order for you where you can move it up if you want. So active trader is like the greatest tool ever. I'm assuming the person who asked me this was the same person asking in after hours. Hopefully I answered your questions for you. If not, feel free to DM me or keep asking. We still got about 20 minutes in here. So hopefully we covered all of that. Easy enough, really simple to set up. As I said, you can have multiple. A setup that I like to tell people to do for if you have one screen, just make it look like this. And so something that I'll do is, I'll be watching SPY because I trade SPY a lot. And then what I like to do is watch some of those other big names. So maybe I'll have Apple down here and I'll have, I don't know, Tesla, it's been running. Down here, you now have the charts. So you can say, hey, if I'm in SPY calls and I see Apple and Tesla are pushing, that encourages me to think that SPY is going to go up. And then you have your contract right here. So you can kind of be watching in a nice little chunk of the market and maybe formulate some ideas where you think it might go, or, get that, get some encouragement to stay in the trade. If you're in the trade, if everything's ripping and you're long, then you can kind of say, well, everything's ripping, I sort of want to stay long. So this is a really nice setup that I love to do. You can even, all depends on the size of your screen, but sometimes you can even sneak in one more down here if you want. So you can really be watching a good chunk of the market all on one screen, have really easy access to your options if you want to be trading them, easy to switch around between options that you want to trade. And then for me, this is what I really like. And then when you have your study sets loaded, this is, you know, I mentioned this 513 EMA. I have a couple screens. So I almost always have a chart just in a corner with this running. So if you have a couple of screens, you can really spread everything out. Maybe you don't want to have a whole bunch of indicators on your chart that you're mainly trading, but maybe you like these 513 crosses. And so you want to be able to glance over at them if they're coming. Maybe you like some that I like to trade with is Bollinger Bands, and they're, you know, they're ugly. You know, this is an ugly chart to have to stare at, but if you put it in the top right corner, so you can just glance and say, oh man, we're selling down, we're hitting this third band, I'm buying calls, you know, like whatever it may be. You can have all of these charts just laid out for you. Okay, and if that is going to do it, we can start looking at some charts for people. I know last night we hit some nice ones, as I said. We can just kind of review one of those. Apple, obviously, and we'll change up our indicators real quick. So Apple, obviously, we were saying we wanted to buy calls if we sold down to the low of this range. First candle broke it. So we got no entry. However, very nice entry here. My buddy actually took the entry here. That's why I did not, but he took the entry here. Very nice entry for us, right in that range where we wanted it. That ultimately gave us a nice run up to, I think, some fresh all-time highs, probably new all-time highs on Apple. So real nice trade there. AMD, another good one, was breaking out. We were looking for any sort of dips down to these, you know, the hourly 171 area. We didn't quite get there, but we saw plenty of base forming right around yesterday's highs to be looking into this trade. So really nice trade here. Unfortunately for me, you know, as we push up to, and not unfortunately, it doesn't matter, but as we start pushing up towards this 180, previous point of big resistance, I'm going to start treading a lot more lightly on longs. Obviously, if we can crack the 180, 181 area, I think 186 comes quickly. But this thing's getting a little bit extended, still has really nice volume backing it up, at least in my opinion. And so can still be kind of looking long on it. Again, won't really have any interest short unless we push up to that 180 for a scalp off of it. Otherwise, break back down into this range is really where we were talking potentially short on AMD. So had no options there to even give it a try. Another one we were watching, Amazon. Obviously, this trade didn't work out. We did discuss potentially, well, I can't say it didn't work out for me. Discuss potentially shorting Amazon below this trend. I said I wouldn't be doing it, so I did not do it personally. And then we were really looking for dips down to this 197 area, you know, all the way up to the 198.30 area, looking for that potential bounce. I do still think Amazon has some work. No reason to be rushing into longs at 200. You know, that's people have just been getting smoked left and right over and over. Maybe you caught the scalp early this morning, but if you weren't quick on the draw in 10 minutes, you ended up losing money on that. So, you know, for now, 200 pretty well remaining undefeated, at least in my opinion. And then when we talk Tesla, you know, Tesla, as much as I hate it, it was one that we were saying, look to buy this dip at 245. It played basically perfectly for us. We got, let's see, how much did we lose on 245? Yeah, we were 50 cents off, but we'll take that. You know, 245, really, really easy place to try to hammer that long. I did not take that entry. I did take the pullback to this 249 level, looking for that little bounce, and I just caught the bounce up to here and was fully out of the trade, obviously, ran a whole bunch more. But to me, still, big picture on Tesla, putting in some nice moves. We're starting to see a little bit of consolidation here. You know, ultimate target going to be up there about that 264 for now. And then above there, we can really get to pushing. But for now, really just based on today's, you know, today and yesterday's range, we got a nice $15 range or whatever to trade within going into tomorrow. And so I think just, you know, keep trading that range. If we break the top, you can try some longs. If we break the bottom, you can try some shorts. Otherwise, you know, short the top and long the bottom. That's what I always try to do. So Tesla, again, still definitely in dip buy mode, at least in my opinion. Finally putting in what we really were talking about last week was finally put in that weekly close outside of this trend for the first time in a long time. Tesla is technically not in a downtrend. Still looking pretty ugly, still sitting, God, you know, 40% off of all-time highs, give or take. And so Still don't, love it super long, but nice area to trade. Tesla putting in those fun Tesla moves that used to, no more of this junk, or this type of stuff. Really putting in some fun moves, making it fun to trade again. ENPH. Is that you, AB? I was getting messaged about this one today, being told to trade it. I'm not sold on the energy trade myself. No denying potential double bottom, triple, quadruple bottom, maybe, could be getting long on it, but man, the solar trade just gets faded, and so it's hard for me to want to recommend the long. I do understand what people are looking at. Breaking that 100, if it holds above 100, you can look to, play some long on it, but it's still one that I don't love it long. You guys all know I don't trade bear flags, but like my mind still looks at this and is like, yeah, this is gonna break down, at least in my opinion. I want to get a different volume on real quick. Second. Nice buying on it, but still, I don't know. I mean, I'm not sold on it, but if you're long, stops are just below 100. It's pretty simple, nice simple trade right here. I do see that. Any opinions on SMCI? No, I mean, we talked it last night, and then to me, and again, I said, my comment on SMCI last night was, I don't have any interest in trading it right in the middle of this range, but it loves to make stupidly large moves. So what does it do today? I mean, it makes like a 70-point run or whatever, but still, breakout's way up here technically. So we're just kind of in the middle of the range. Obviously, buy some dips down to the trend with stops below it if you want, but right here, we kind of rejected right about, if you just look left on the chart, we really kind of rejected about where you would expect it to reject. So I'm not rushing into longs on it or anything like that. It's just, that one's just such a mess to trade anyway. Speaking of like never market order and large spreads, that thing's like the master of it. Let's see. So we talked to AMD, we talked Tesla, we talked ENPH, SMCI, PLTR. Talked it yesterday too. Basically said, if we break over this is where you wanted to be looking to get long, was a break of that high. But the price action on it today was rough. Sellers showed up early on that gap up, and they did ultimately buy it back above. But now I want to see some daily closes here. But as we said, you're targeting that 29.23 if we are able to stay outside of here. And this dip to 27.50 after breaking these nice highs, if it comes down here, or we sell under and buy back over, really nice entry with a tight stop, where if you do end up having to stop out, you're only gonna be risking 20 or 30 cents on the equity. So really no big deal, so it's offering a trade. Now that it's broken out, great. We did say if it breaks under here, short it. And that was probably the highest paying trade of the day because it happened so quickly. But it was ultimately bought up. So if you did short it, you just have to admit, you're wrong and the buyers, and you didn't take your money. You do just have to admit you're wrong. Buyers shut up, stop out of the trade when it breaks over. No big deal. XLE, I mean, sort of the same thing, we talked about. XLE was just nonstop because stupid Chevron was nonstop, as we said, first breakouts typically fail. We're seeing a real nice breakdown on these oil names. Obviously, I expect some more breakdown. We did take a bounce on it, but I won't be surprised to see us visit these trend lows kind of down over here. Definitely not bullish on the energy sector right now myself. Even on this bounce, no denying it was a really nice bounce, but after just an absolute clobbering, you got to expect a nice bounce eventually. But as we can see, the market had no interest in sustaining that bounce just yet. PDD, huh? A lot of money going into it. What makes you say that? Did you see like some flow or something on it? I don't know. Get some levels on here. This is something I never trade either. I mean, I've traded it in the past, but I don't know anything about it. I don't know. I would want to see some buying over that trend over 135 area sustained for a couple days for any interest in longs. But really, I'd probably be looking forward to push into this trend. Maybe even this EMA, take another little short on it and see if you can squeeze a few more bucks down to that 130 would be a much better entry. Tim, a lot of people in day trading community don't trade IWM and the rut. And yeah, yes and no. It depends. That futures market is hot. If you don't know, this is YM is the Dow Jones. And so this thing, I mean, this thing does it gets some play because it moves a lot. Yeah, I mean, it's not every day you can catch a 400-point drop on something. So the Dow is heavily traded in way of futures, small caps, the rut, all of that is heavily day traded. But IWM, I trade frequently. I talk about it a lot. Oops. So the main thing that we're watching on IWM, and let me find is it this one? Main thing that we're watching on IWM, this is why a lot of people don't trade the rut or, any of these things and because you get this range bound movement. And so, people that are day trading, they like momentum. And this just hasn't had momentum. Don't get me wrong. Like, obviously, this was, what happened here. We know what happened here. This was the very first time the Fed said the word rate cuts. And look, that's, small caps are what will outperform in a rate cutting market because nobody's buying them. Nobody's holding them. Small caps are demolished at this point. So we need rates to come down so they can borrow money so they can function again, because that's how the small caps function is they take on debt and they function through debt. And when the interest is so high, they can't take on debt. But I will say that I trade this one a lot. Sushi trades this one a lot. We have been absolutely basically every time IWM has touched 200 anytime over the last few months, we've been getting in calls because the bounce is paid. Obviously here was one where it didn't work out, but it got clobbered the first day. So you didn't get this smoked, but that 200 level has been absolutely money. And then when we zoom out, we can see we're getting very tight. We are gradually inching closer. I was personally expecting the first rate cut to come either the June or July meeting. Now they're saying September. So it's a meeting later than I expected personally. But when those rate cuts start coming in, I do think the market likely sees a little bit of selling, but the buying will start flooding into IWM. It's important to remember that rate cuts aren't an overnight thing. They're going to do like a 25 basis point cut. And so they'll have 20 more of those if they want to. So it's not going to be like an overnight thing, but as we see the rates start coming down, if we can get a nice little dip on IWM as rates start getting cut, that's where you'll want to look to get long in that sector. Rudy, who buys those option contracts at the last second? So the market makers. It can be one of a couple of things going on. One of them is market makers have a legal obligation to provide liquidity to the market. So they're basically required to buy and sell those things last second. It can also be retail traders. It can be big money people. If you're in the money, sometimes they'll just buy those things and let them cash settle. The other thing it can be is the market, because it's awesome when Flips hits those bangers, 50 to 500 bucks or whatever it may be. But the important thing to remember is that when that contract was originally sold, by the original market maker, it was worth thousands and that, like, $15,000. It is now whittled down, $10,000, $12,000 of value that the market makers get to keep. So they'll buy it back. And like they might have sold the contract for $12,000, so maximum gain was $12,000, and they're buying it back for 500 bucks. So of the 12,000 they stood to make, they're making 11,500. So they just buy them back. It's really, it's no big deal to them. Good question, John. I don't know why SPY and QQQ are ripping after hours, but they are putting in a nice rip, huh? Finally, a little bit of selling showing up. selling at the double top. We'll see how we open. So all-time highs is tricky for setting any sort of level. The main ways that I personally like to do it are Fibonacci, either using your retrace, but those higher percentage retraces or extensions, or really one of my go-tos is B bands. I love to use the B bands to identify some of those like volatility levels up there, or just look at the whole round numbers. I mean, we got SPY at 556. You can kind of assume as we start pushing up to 557, we might falter a little bit. So just kind of look at those whole round numbers. And then if you need to, you guys know most of my levels come from the daily and 4 hour, but we talked this on Apple yesterday. When there's just not much data, you need to zoom into the hourly or the 4 hour. We've only traded one day up here above this 555. So we really only got a couple levels, and we know, this was the previous high. This is where we took some hourly rejections. This 555 is, if we dip down to it, that's likely where I'll be looking to buy things tomorrow. And then where was this high early in the day? We set this nice high early in the day. It lines up to, a lot of people, myself included, trade previous day high and low. So mark that previous day high and low if you're trading those all-time highs, and you can get a few levels to work around there. Nvidia, still, still in this range, was not able to close outside of this range, was met with selling on the first breakout of this range, which is kind of what we discussed. We were looking for a push over this 50, and then ultimately a rejection back below this 50. We are at an interesting place on it where maybe tomorrow is the day where we break out. I do kind of think, chips had some juice today. A lot of them did see some selling in the end, but chips had some juice. So I kind of got my eyes on them to see if they, maybe want to keep going. We'll see. Disney still bleeding. No surprise. Like literally none whatsoever. But yeah, we talked Disney last night. We said, and he bounced to 98.50, short it. I unfortunately missed this one. Ooh, look how close we got. We might have not got our full. We were a little shy of it, but that's pretty close, But yeah, short it. I mean, this is not. Look at this chart. Nobody wants to buy it, so don't be the only person buying it. Ooh, and then we got dividend today. We got to see what happens after dividend. People like to sell after dividend, so again, I said that somewhere down here, 95, I'll likely be taking a stab unless we see some really big selling. But I like to trade, trends like this. And if we can get this third push down, kind of break below it, 93, 92 area, I'll look for that technical bounce back up there. But not the place to be long on Disney, that's for sure. Meta. What do we got on Meta? Ooh, big reject on it today, huh? Oh, sold the whole gap off. Or gap down. I don't even think I looked at this today. Well, this was where we were looking to get long. Looks like if I would have taken that meta trade today, I probably would have got stopped out, obviously. But that's where I'd be looking to get long. Otherwise, much bigger picture, not obviously saying that it's going to happen. Ooh, giving up that previous all-time high too. Not saying it's going to happen, but somewhere down here, this 514 area, that's where I'd really look to be trying to get long again. You could risk it at 520, but 514 is where I'd be looking to really try to get a better long position. And then again, if we can break back over these previous all-time highs, it's worth it to take a stab there as well. What do you use to help you learn how to chart? I mean, to be honest, nothing. I've just done this for quite a while, and so I just kind of did it. I looked at what worked. I mean, I'm sure I watched like a support and resistance video many years ago, but I just keep support and resistance super simple. Look for major highs and lows, whether they're on the daily, whether they're intraday. You can always find levels to trade. Let's pull up some that like trades levels. Nice. I mean, AMD. Here's one, and AMD. It's a pretty technical respecter. We didn't have a level here, but we can see here we had many attempts at this level. Any of these dips down to 173.63 were worth noting, just because those ended up being major bottoms. Major bottom here, major bottom here, not huge bounces, but over $1 every time. So these are all reasonable buys, and that's what I look for. And then obviously this was our major high over here, and I'm not saying you should have like held these contracts with no trims for a $5 rip or whatever, but this obviously should have been your ultimate target. If you're just in a runner, you can obviously let it breathe a little around there, but previous major high, slap that line on there and trade around it. SK asking about ET. I haven't looked at that one in a long time. Wow, it finally did it. I wonder when I was trading this, it was much lower. Look, that's the last time I was trading it, around 11 bucks. Man, that thing really went on a run. I can't wait to tell Tilia about it. We were trying to catch that breakout for a long time, and we never did, unfortunately. Getting into a pretty sticky zone up here, though. This 17 to 18 likely going to cause some issues. Definitely feeling like a chase on the, 500% run in the last few years, whatever it is. But up here looks to be a little bit tricky for me. But no denying, super strong uptrend, Stay long on this thing above this trend. Any dips down to here, buy those dips. Could be putting in a double top here, but still look for any pullback to buy. I would want to see a deeper pullback. I'm not saying just buy like a 10-cent drop, but nice, Ant. You love IWM. Have a good one, Rev. Yeah, Baba puts always pay. Baba puts always pay. Look at this thing. That chart is just horrible. This is the trade that people have been trying to catch the bottom on more than anything else I have ever seen. PayPal's getting to be a contender, but man, yeah. Ooh, 1K, I love that question. Let's pull them up. So Bollinger Bands, we did just talk about them. They're definitely a bit of an ugly thing, but they're all based on, and it's not, so it's kind of weird because it's not exactly the standard deviation math. Bollinger, the guy when he invented them, he actually included a little bit of extra math to include some volatility. And so that's why you see slightly more, aggressive movement on them. Well, when we have, oh, I can't get rid of those ones. Let's do, we'll just do another, I don't know. So we got the bands here. And what are the bands telling us? They're telling us, where can we kind of expect to reject based on standard deviations? And so what we know about this is that and I run two sets. This one and this one are together. The red and the purple one are together. Those are two standard deviations. This one and this one are three standard deviations. So the math's a little different, as I said, than standard deviation, but 85% of data will fall, and that's a ballpark. The number varies a little bit, but give or take 85% of data will fall between these two bands. So we know if we push outside of it, one of two things is happening. We can either expect a bit of a rejection coming, or we can expect some sideways movement because we're overextended. Every once in a while, you'll get a couple closes between them. So what we see right here, when you are between these two bands, it's something like you have a 5% chance of staying between these two bands. That's almost all of our data is here. Only 5 or 10% of our data ever lands within these deviations. So that's what we see. Most of the time, the market spends no time outside of them. They'll touch it, and it doesn't mean just short it when it gets there, because frequently when you're seeing these types of pushes, it's just showing you really strong momentum in your direction. But if you start to see a push up to this third band, that's when I will start to look to short, because that there is less than a 1% probability once we're up here pushing on it that the market will stay there. So we just use those probabilities to our advantage and say that, there's only a 5 or 10% chance that we stay between here. There's a 1% chance if we stay out here. Something that I've actually joked about with friends, you can have larger deviations. You can put the fourth band on here. And if something touches the fourth band, there's like fractions of a percent chance that it stays there. As you can see, it will basically never touch the fourth band. If it does, you take the opposite trade. Sometimes you'll see them really early in the day, an extreme push outside of it. You can almost always take a scalp off of a fourth band, or always take a scalp off of a fourth band. If you push down close to it, you can look to scalp off of this, and your stop is just going to be barely past you. You know, it's going to be sense of risk. But we know the chance of it closing out here is like 0.0001%. So we aren't going to spend much time here. You might not get a big bounce, maybe you get a smaller bounce, but you can almost guarantee you will get a bounce there. Netflix. So far, barely kind of holding the breakout, but still really no interest long for me. You know, big rejection there, and then barely holding the breakout. For now, just kind of range trading. If I was going to lean one way on Netflix, it likely would have been short. Obviously, the short under that trend might have worked for a few bucks today, but I would not be leaning long on Netflix just yet myself. Obviously, far from bearish on it. Like, this thing's overall very, very bullish, but still not rushing into a trade right here. Those OR blue lines, the opening range lines, those, it's another script pinned in my tab. Just to tell you though, it changes for an hour and a half. And then once an hour and a half is set, because that's when the opening range is set, then it will stay solid and it won't move. But you know, don't get sucked in early in the day when you see the blue line and think that it's the opening range, because, you know, and we're 15 minutes into the day, because it's not. So just want to put that disclaimer out there. Oh, and I see it's 6 o'clock. We had another great turnout tonight. I saw like over 50 of you in here. That is just great. Thank you all for being here. If you got to get out of here, right on. We're probably just going to check out Microsoft. But again, thank you all for being here. I appreciate it so much. And Microsoft. It's laying down a mean doji for us. Oops. Laying down a nice little doji for us. I mean, this is like, honestly, going into tomorrow, that is basically the range that I would personally be playing. I'd basically be looking for calls on a break of that, puts on a break of that, and not much interest in the middle. You can obviously try to play the bounce or the rejection if they come, but not a ton of interest right here for me until we get out of there. Okay, and if that is going to do it, thank you so much, everybody. Again, I really appreciate you for being here, and trade safe tomorrow for any of the new people, as I've been trying to say over and over. If you got any questions, feel free to send me a DM. And thank you. A lot of great questions tonight. This was awesome. And we'll catch y'all tomorrow. Yeah, thank you all.